Good evening, everyone. Would like to start the meeting by wishing all of you a very happy new year. So, in Q3, we saw the macro factors of Q2 continuing, coupled with the seasonality. In this backdrop, on the constant currency basis, our revenue grew by 4.5% year on year and remained flat on a quarter on quarter basis. Our rupee revenue grew by 5.6% year on year to reach 63,973 crores. We achieved an operating margin of 24.5%, an expansion of 40 basis points despite the seasonal headwinds. This translates to 15,657 crores of operating profit. Our net margin for the quarter has come in at 19.4%, translating to 12,380 crores. Consequently, our EPS reached 34.21, up 6.4% year on year. Cash from operations at 13,032 crores represents a conversion of 105.3% of net profit. Given the seasonal weakness and softer discretionary demand environment in this quarter, most of the verticals and markets saw a sequential negative growth on a quarter on quarter basis. On a year on year basis, UK grew by 4.1%, North America by minus 2.3%, and continental Europe grew by minus 1.5%. The new growth markets of India, Asia Pacific, Middle East and Africa and LATAM continue to deliver a good growth, offsetting the weakness in major markets. Particularly, our revenue from India grew by 70.2% on a year on year basis. Among the verticals, on a year on year basis, BFSI grew by 0.9% and consumer business grew by 1.1%. Energy, resources and utilities grew by 3.4%. TCS Banks and Products and Platform continued their growth momentum. Life sciences and healthcare and communications and media continued to have negative growth on a year-on-year basis. Our customer metrics remain strong and resilient. The number of customers from whom we make more than 100 million rose by 3 to 64 customers on a year-on-year basis. There has been a strong customer movement across all other brands as well. In addition, our customer base of 1 million plus stands at 31,309, an increase of 21 over last year. Our order book closure for the quarter stands at $10.2 billion. Our order book for North America stood at 5.9 billion and for BFSI 3.2 billion and consumer business at 1.3 billion. This represents a strong order book closure of over Q2 and Q3 of FY24, giving us a confidence and comfort on the outlook for the future. By the end of Q3, our net employee count stood at 607,354, a reduction of 5,370 on a sequential quarter on quarter basis. Our IT services attrition stood at 13%. The board has proposed an interim dividend of 10 rupees and a special dividend of 66 rupees, amounting to about 27,500 crores. This is in line with our practice of returning 80 to 100% of free cash flows back to our shareholders. We are seeing continued momentum in AI adoption. Clients are increasingly investing in agentic AI adoption, building robust data foundation, and taking a value chain based approach for AI and Gen AI-led transformation. We have launched an innovative offering, TCS 5A framework for responsible AI with AWS. This is the first of its kind in the industry. It helps identify and mitigate AI risk holistically. We also saw an increase in successful production deployment of AI Gen AI engagements, leading to greater business certainty and confidence for our clients. Our investments on research and innovation continued. In Q3, we applied for 195 patents and were granted 216 patents. Overall, 8,549 patents have been applied and 4,585 granted. With these updates, I hand it back to Kritika and we can open it up for questions. Thank you. Kritika.